Good morning, it's Harvey Jackson. Just going to get through some news that hit the newswire. Trump to visit China President Xi on, I think it's on Wednesday, Thursday. Soys are optimistic that it's going to be a major part of the topic, but when you can see here that there's a lot of other things that are maybe on China and Trump's mind. U.S.-China is set for deals on agriculture purchases, trade, and investment forms. Talks to address tensions over Iran, Taiwan, nuclear arms, artificial intelligence. So yeah, there's a lot of topics here. So yeah, we'll have to see how this all plays out. Which one's going to take the lead? I don't think it's going to be soybeans, but that's just my opinion. But soybeans are optimistic that there's going to be maybe cementing a deal a little bit further. Trump got a proposal that came back through from Iran, and it didn't like it at all. There's Iran demands end to end the blockade, compensation, sovereignty over Strait of Hormuz. U.S. faces domestic international pressure as energy prices rise. Yeah, so this is just continuing here. On Friday after the close, there was the commitment traders put out their positions from the Tuesday to Tuesday prior, and it does just, it's dated information, but here it is. You can see that it was a record when you add the total net positions. There's a USD coming out here this week, and there's a fair big range of estimates on the wheat ending stocks, and with that, it's not going to put wheat in any tight supply. As far as the USDA is concerned. So, but you can see the range is right there. Karen Braun put this up. Egg resource is just some of the key factors that I pulled from one of their YouTube videos is just the cost of freight. So Baltic Dry Ocean Freight Index, month of May, you can see that it's the highest that it's ever been on the daily rate. They're doing some analysis on just what is the war residual. Wheat is carrying about 25 cents, soybeans $1.45, and corn only 50 cents. On as a war premium. The other article, or the other point that they were making earlier or last week, these are the three things, or beginning of the week, there's three things that they were looking at: the U.S. war against Iran as things to watch for the U.S. grain market, U.S. grain summit, and then the central U.S. weather and planting, and that doesn't seem to be a factor anymore. Or at least it's not getting priced in anymore. Not to say that it won't yet, but just following suit with weather, the El Nino rainfall, and it gives you a timeline when it's supposed to be wet and dry. So a good part of India looks like it's going to be dry to the north. The southern tip may be a bit wet, depending on timeline. U.S., it's January to April that it's wet in the southern plains, and Canada looks almost normal. And then you got Brazil, northern part of South America, quite dry, July to December. Let's just have a quick look at the snowfall. There does look like there's going to be snowfall coming in the next few days, and then towards the middle of next week that there's some more snow that's going to hit. Looks like me. There's some weather warnings, high red flag for fire, but then there's the frost that's showing up here. You can see that there's some frost here. Just going to start showing some of these maps again here. The total soil moisture, this hasn't changed since April 30th, but you can see that deficient in this area, and then what I'm looking at is difference from normal, and there's quite a few different areas that are different from normal. Now, I don't think anything has really got added to it. You can see the north is wetter than normal. Europe doesn't have any threatening weather. It looks like it's actually going to just have enough moisture for the beginning part of their growing season, for sure, by the look of this anyway. Quick look at the markets. Canola is down just 20 cents for the July contract at $7.52. November contract just slightly up at 30 cents at $7.58. Rapeseed is up $6.50 at $5.17. Soybean oil is up a half a penny at $74.85. Palm oil just basically unchanged at $44.84. Crude oil up $2.46 at $97.88. Crude Brent just shy of $100 barrel, and your diesel fuel is up 5 cents at $3.95. Soybeans are up 12 3/4 cents at $12.20. So that's the optimism in there. Spring wheat up 7 cents. Hard red winter is up 6.5. Chicago is up 6. Corn is up 3.5, and the Canadian dollar is basically just tracking sideways here. So let's just have a look at the charts here. Your 10-day moving average seems to be putting a lid on the market from going up here, it seems, and it's caught in this area now. Where it spiked up to, and they said it was a decision level of what to do. It's still, slow stochastics is still saying to go short here. Your November contract, again, a lot closer to the highs that we just made last week. And your rapeseed, last week's highs, it's green up against the 10-day moving average. And the same thing with soybean oil, tracking right at the 10-day moving average. Soybean futures back to mid last week's values as well. Still a little ways to go to get to the values that it made back in March. Crude palm oil still below this line here and trading right at some converging with the medium term and short term moving averages. Crude oil stuck right here with a short term moving average and trading above some of the medium term moving averages. So it still looks like an uptrend. Same thing with Brent. Crude oil or diesel fuel still feels like it's got some pressure going up here. Same with gasoline. Canadian dollar, from what, just the short term here, it does look like it's going down. But, see it to believe it, it's got to cross over some of these longer term moving averages. Copper, trying to make out new highs here, along with the S&P. So I just look at wheat here. This is July, and just where some of these pricing levels are. If the market wanted to keep running here, still wanting to reward these rallies here. So here's your December contract. You can see that we're caught it below the 10-day moving average, but that flag down. We'll see if this is going to try to get back up to that 730-ish area. Kansas, just looking back timelines here, we're not in that area yet, but we'll have to see if we can track up there. If anything, the Kansas can actually take some leadership here. Chicago wheat got above that breakout level, and then upside is way up there. Corn futures, nice support here when you just look at it farther back, but you got these highs that were made that we never got to from last year. Just quick look at the beef trend is up still, and you got to remember this is the timeline the grilling season is on, and when we get to the fall, we're usually not this kind of strength depending on what kind of summer we get. There's still lots of drought and a lot of cattle area, that is for certain. Feeder cattle not making new highs yet, but it's bumping up its head there. Lean hogs, I'm just showing a monthly chart, and you can see short term looks like we're got some sort of support here, right just below the $100 value here. So WASNI tomorrow, and we'll see what comes with that.